AMD delivered record growth and exceeded the headline earnings expectations. Yet the stock initially declined, as investors weighed the results against unusually high expectations. This is educational research, not financial advice. Please verify all data independently. The market looked for approximately $11.32 billion in revenue and $1.62 in adjusted earnings per share, with data center performance serving as the main test of AMD's AI momentum. Investors also wanted evidence that growth could continue beyond favorable year-over-year comparisons. AMD reported $11.5 billion in revenue, about 1.9% above expectations, and 50% higher year-over-year. Adjusted EPS reached $1.66, beating the $1.62 estimate by 2.5% and rising 246% from the prior year. The available evidence does not establish a single confirmed reason for the post-release decline, so this presentation does not rely on provisional, after-hours price figures. Investors appeared to focus on elevated expectations, unchanged 56% non-GAAP gross margin guidance, limited standalone AI revenue disclosure, and the spending required to support future growth. Data center revenue was the clear growth engine, reaching $6.7 billion after more than doubling. Client revenue rose to $3.1 billion, and embedded to $977 million, while gaming fell 31% to $779 million. AMD did not report a separate AI revenue figure. Profitability and cash generation improved substantially, with GAAP gross margin reaching 54%, non-GAAP operating margin 27%, and operating cash flow $2.4 billion. However, capital spending nearly tripled to $808 million, leaving free cash flow at $1.6 billion. AMD guided for third quarter revenue of $13.0 billion, plus or minus $300 million, implying roughly 13% sequential growth from the prior guidance level. The midpoint exceeded approximately $12.5 billion in consensus, while the non-GAAP gross margin outlook remained near 56%. Management described accelerating data center demand across both CPUs and GPUs, continued scaling of Instinct MI350 deployments, and the beginning of Helios rack-scale system ramps. These developments support AMD's broader AI infrastructure ambitions, but deployment plans are not the same as recognized revenue. The quarter showed clear operational improvement through more than doubled data center revenue, a 27% non-GAAP operating margin, and $2.4 billion in operating cash flow. At the same time, gaming declined, capital spending nearly tripled, and flat gross margin guidance limited the enthusiasm. The results provided tangible evidence of stronger AI infrastructure execution and improved profitability. However, spending accelerated alongside growth, and AMD still did not disclose standalone accelerator revenue, leaving the scale of its AI opportunity difficult to quantify precisely. The bullish case rests on $6.7 billion in data center revenue, continued sequential growth implied by third quarter guidance, and improved operating leverage. The counterpoints are gaming weakness, rapidly rising capital spending and operating expenses, and margin guidance that offers no near-term expansion. The next report will show whether data center growth and product mix remain strong as Instinct and Helios deployments progress. Investors will also focus on gross margin, spending relative to free cash flow conversion, and signs of stabilization in gaming revenue. AMD posted a strong headline quarter and offered supportive guidance, while AI momentum and profitability were also meaningful positives. The lower execution outlook score reflects remaining questions around spending, margins, product deployment, and the demanding expectations already embedded in the stock. Thanks for watching. Like, share, and subscribe. Then visit AIStockshub.com.